Have you been thinking about buying a home, but you just don't know where to start? Let's talk about that. Hey guys, AricRdavid here with Remax. Today I wanted to talk to you about the first and probably the most important step you need to take whenever you decide you're going to purchase a home. That first step is financing. If you're fortunate enough to be able to pay with cash, all you're going to need to do is provide proof of funds whenever you go to submit an offer on a property. But the majority of home buyers will have to take out a mortgage. That doesn't mean you don't need cash on hand. There are some upfront costs in the transaction, those costs being an earnest money deposit, inspections, and usually you have to pay for an appraisal up front. The earnest money deposit is submitted to the title company after your offer is accepted on a property. The only way you lose that earnest money deposit is if you get to a point of the transaction and you decide you need to back out for no reason, not due to inspections or appraisal, then you will lose that earnest money deposit. But if there's ever anything that happens in the transaction, in the inspection period, or with the appraisal that makes you need to back out or want to back out, that money is refundable. The following are a few tips that I've kind of outlined to help save you time and frustration towards the beginning of the process. Step 1, know your credit score. Currently, most lenders require a minimum score of 580. Higher is obviously always better. There are some apps you can use to track your credit score, but they're not always the most accurate. A lender will be able to give you a completely accurate idea of what your credit score is currently at. And if it's a little lower than what it needs to be, they can kind of help coach you and give you some tips on how to bump that up to where they'd like to see it. And the higher your credit score is, the better position you'll be in. Step 2, save. In most cases, there are going to be some significant costs when purchasing a home. The two major ones to consider are the down payment and the closing costs. Without getting too deep into the types of loans there are, most loans are going to require a minimum of 3.5%. I think right now, one of my lenders that I use, they offer a conventional loan at 3%, and that's a 3% down payment. So if you're purchasing a $100,000 house, the down payment on that home itself is going to be $3,000. There are still closing costs to tack onto that as well, but the down payment itself, 3% to 3.5%. And that 3 or 3.5% is the minimum down payment. You can offer a higher down payment if you offer 20% or higher. Generally, you don't have a PMI, which is a private mortgage insurance, which will save you money on the actual mortgage. Then there are the closing costs, which that has a lot of different variables in it. Those take into consideration when in the month you close on the property, origination fees from the lender, title fees, taxes. All that is figured out and prorated for your specific closing date. I know one of my lenders charges a flat fee of $2,900, but then the variables are, if you close on the first of a month, you will be paying the prorated amount of taxes, insurance, and days used of that property. So if you close on the first, you're going to pay for that whole month mortgage payment as if you were paying your first mortgage payment. If you close on the 30th, you're only going to pay for 1 or 2 days of proration on taxes, mortgage, and insurance. I usually try to estimate the closing costs on the high side, and the lender will do the same thing. It's better to get to the closing table and see that you aren't paying as much in closing costs as you thought you were going to. But the costs generally are going to run anywhere from $4,000 to $6,000, depending on the price of the home, the amount of taxes, how much it costs to insure it, and different things like that. Some loans can help you cover the down payment or completely cover the down payment for you, like the VA or USDA loan, but those will have their own criteria or qualifications of the person or the actual property itself. Some lenders also run a down payment assistance program. The more questions you ask, the better off you can be. See if you qualify for them. They may be able to cover the down payment for you. Sometimes even partial on the closing costs. Step 3, have all your documents. Lenders will usually require your last 2 pay stubs, 3 months worth of bank statements. They'll want to see some of your bills. They just need to get an idea of your income and your debts so they can figure out your debt to income ratio. That helps them figure out what your purchasing power is going to be and how much they can pre-approve you for. Step 4, get pre-approved. Keep in mind you can speak to a lender before you start any of these steps or anywhere that you are in the process of saving or building up your credit. They're there to help you. That's their job, is to help guide you in the right direction and get you to where you need to be in order to be able to purchase a home. Once you do get a pre-approval letter, you're ready to go shopping. Keep in mind though, that pre-approval letter that they give you is a snapshot that is taken of your credit and all your debts and your income. So don't change any of that. Don't go out and get a credit card ran up or apply for new credit cards, apply for any new credits or loans. Don't buy a car. Don't do anything that is going to change that snapshot that helped you obtain that pre-approval. If you do, they're going to have to rework all those numbers, and you may qualify for less, you may not qualify at all. And if you're in the middle of purchasing a home and you do something like that, it may make the whole thing fall apart. And then you're going to be back at square one. So don't buy a car, don't buy new furniture, just don't spend any money. Just keep the thought process of, I need to save, I need to keep my credit where it's at, and I need to close on this house, and then go do whatever you want. Being financially prepared is the biggest, most important, and usually the most neglected step in the home buying process. It's not fun, it's not glamorous. They're asking a bunch of questions about your money, but it's vital. It is one of the most boring parts of it, but once that's out of the way, the fun begins and you can start shopping for a home. If you found this video helpful and maybe even slightly entertaining, just stick around, like, subscribe. I've got more content coming your way. Thanks. See you later.